The banking industry has had a wild year. Earlier in the year, you had some bank failures that caused a lot of bank stocks to go down. Also, the automotive industry has seen a very dramatic change this year. Last year and the year before, used car prices were going through the roof, and the new car manufacturers couldn't keep up with demand, chip shortages. So a lot of changes there. Why am I talking about banks and cars? That's because I'm going to cover Ally Financial today. They're in a finance capacity, running a bank, but doing a lot of the financing for automotive sales. And that's why I'm talking about those two industries. And I'd like to analyze Ally Financial in this video. My name is Victor. I have an MBA and a lot of business experience, and I do deep analysis into companies that I look to invest in. And in this video, I'd like to tell you about Ally Financial. I like to scorecard my investments and make sure that I follow a process that leads to a very good investment. The process involves 4 questions followed by a decision whether I should buy, hold, or sell a stock. First question, do I understand this company? Do I want to be a part owner in the company? Do I like this industry? Do I understand the industry? Is the company operated and performing well? Is the bank book value growing? And I have a different method of looking at the balance sheet for banks. I want a discount on the stock because what I intend on doing is having my investment appreciate in time. And the best way to do that is by getting a discount when I buy those shares. Based on the answers to those questions, I decided whether I should buy, hold, or sell this stock. Ally Financial was once GMAC. You may have recalled that company. They did all the financing for GM related sales. They also did home mortgages and other types of financing. They changed their name in 2009 and have diversified away from car financing, but still car financing is at the core of the business. They have a credit card. They have an online bank that's quite popular. It's grown quite quickly, and they continue to do mortgages, but that's a small business for them. I understand who they are, understand what they do, and it's an industry that I do want to be a part of. And the reasons for it is they pay a very good dividend, and they've handled the financing aspects of automotive sales among other categories. So it could be quite profitable. It's also a good diversification play for my portfolio. Sales and income for Ally. Over the last 4 years, they've grown the company about 16%, not tremendous growth, which is interesting. They have been profitable in the past years, especially 2 years ago. They were really profitable. A year ago, they were really profitable. But this year, things have changed a bit. First, their financing revenue has gone down. I think the number of car sales has gone down. It's really come down from 2022, 2021 levels. And if we compare the prior year to the current year, the most recent quarter, they announced their earnings yesterday. It actually was a 30% decrease if you compare Q2 of 2023 compared to Q2 of 2022. They were profitable, which is very good to see, and they did have a good earnings per share. The total earnings per share for the year is expected to be $3.28. Next year, it's going to rise to $4.60. So it's good to see that long term, there's going to be some value in this company. It has a low PE. I think part of that is that combination of banks were somewhat uninvestable in 2023 because of that bank scare that some banks went under. So the PE really dropped because their stock price dropped, and it's a really low PE right now. I'm going to use about a 10 PE because I think that'd be a fair PE to use in my evaluation. And I'm going to use what analysts are expecting for the full year 2023 earnings per share. I value banks different than the way I value other companies. If you've seen my videos, I usually take free cash flows and I use earnings per share, but banks are different and they operate different. So I'm going to use book value valuation method. I'm going to look at their earnings growth, and I'm going to look at their earnings per share. So first, I want to see book value growth. And the good news about Ally Financial, historically, they've had really good book value growth. And I'm expecting it to continue to grow into the future. I think it's going to grow 3% over the next year, and it's going to grow beyond that at 2.1%. Earnings have been they went down, but I think they're going to begin to pick up. It's expected next year that it's going to pick up almost $1 per share. So that's really good growth. I'm still going to be conservative and go lower growth just to be conservative on that. I'm also going to go earnings per share method. Analysts are expecting that earnings per share are going to be $3.28. I'm going to use a price earnings of 10, which is very fair, and have a growth rate of 4%. Based on that criteria, the earnings per share method reveals a actual premium on the stock of 3%. So you're actually paying more than the stock is worth based on the earnings per share method. If I look at the combination of book and price earnings method, they have a value of $45.54, but they are trading at $29.16. So if we look at the book method and the earnings growth method, they actually have a discount of 56%. So therefore, on average, using the three methods, there is a 37% discount available to me on Ally Financial stock. Ally stock is up 19% year to date, even though we had a big drop related to that bank scare earlier in 2023, when you had Silicon Valley Bank go under and another bank go under. It really put a scare on Wall Street that, hey, all these banks are going to start having a lot of trouble, which was due to the inflation rate increases that happened. I think banks had a lot of long-term risk in their bonds, and it really brought down the price of Ally Financial. I think if Ally Financial can weather all of that, there's a good opportunity long-term in this stock to see the stock price go up. Let me scorecard Ally Financial. Do I want to be a part owner in this company? Do I want to be part of this industry? Yes. I like the diversification into financials. This industry can be quite profitable, and they pay a really good dividend. I don't think the company is being operated as well as it's been operated in the past. I think the drop in revenue is a concern. The drop in profit is a concern. So no check mark there. The bank book value has grown, which is very good to see. There's a discount available on the stock, but I'm just going to be holding my shares. I think Ally can turn things around, but I'm going to see a quarter or two of evidence that they've made that turn before I'm going to start buying shares again. Hey, thank you for watching the video. I really appreciate it. If you'd like to leave comments, I would appreciate that very much. Either feedback or comments on Ally or anything in these videos that you would like to see more of or less of, frankly. I really appreciate it. And keep in mind, these videos are just for entertainment and educational purposes. I'm not giving you financial advice. I'm not recommending you buy or sell Ally stock. Good luck investing in 2022.